Dear friends, welcome to weekly view on markets. All indices corrected by 1.5 to 2% during this week. US has announced 25% trade tariff on India effective from 1st August. This has spooked the markets and all sectors have seen correction during this week. Technical charts have broken below the intermediate support levels. Quarterly results so far are of average type and they are not able to enthuse the market. Trade tariff may impact Indian GDP growth by around 0.5 to 0.6%. Also, it may have impact on many sectors involved in export to US. Trade negotiations with US are in progress, and if it gets signed off with lower tariff, market will stage a quick recovery. In such time, markets will struggle at lower levels with some kind of negative bias and consolidation. Let us look at performance of indices. Nifty closed at 24,565 with a loss of 271 points. Bank Nifty closed at 55,617 with a loss of 911 points. Midcap Index lost 1,372 points, which is 2.37%, closed at 56,637. Small cap index lost 3.42%, closed at 17,668 with a loss of 626 points. India VIX has gone up by around 6%. It is at 11.97. Now let us look at sectoral performances. Except FMCG sector, which gained about 2.69%, remaining all sectors ended in red. Realty sector lost more than 5%. Metals, PSU banks, media all lost around 3%. Pharma, information technology, public sector companies, healthcare, private banks, oil and gas, manufacturing all lost 2 to 3%. Manufacturing, consumer durables, commodities, auto sector, NBFCs all lost between 1.2 to 2%. So there was all around selling in the market in the fear that the trade tariff will affect the GDP growth and also performance of companies in various sectors. Now let us look at technical charts. This is the daily chart of Nifty. Nifty has corrected during this week. We can see all these candles coming down, and on Friday it has just closed at around the support level of 22,500 levels. So if Nifty breaks this level, the next support will be at around 24,000 for Nifty, and we'll have to see whether Nifty will further go down or it will stage a recovery from here. I feel that it has been maintaining this channel for past several weeks and it may pull back from here and still remain within this band. This is a chart of Nifty Midcap Index. Midcap Index also has closed around the support level of 56,637. It has clearly broken the earlier support level at around 57,600. It has clearly broken the earlier support level at 57,600. Now, Nifty Midcap Index may pull back from here off, or if it breaks down, the next support level will be at around 54,600 to 54,700 levels. This is the chart of Nifty Small Cap Index. Nifty Small Cap Index has also broken this earlier good support was at around 18,000. It has broken that support, and now the next level of support is at around 17,500 and followed by 17,000 levels. So next week will be crucial whether it will pull up from these levels or it may go down further to the 17,000 levels. This is the daily chart of Bank Nifty. Bank Nifty has broken the earlier good support, which was at 56,400. Now it is coming towards 55,200. So the next support is at 55,200. So we'll have to wait and watch whether Bank Nifty stages a rally from here or it will come to around 55,000 to 55,200 levels. Now let us look at some of the macroeconomic fundamental parameters. RBI Forex reserves is at 698.81 billion US dollars. It is up by 2.7 billion US dollars during this week. Foreign exchange rate is at 87.54 rupees for $1. Dollar index is quite steady at around 97.67 levels. Rupee has weakened after the US has announced trade tariff from around 86.5 level to it has gone to 87.54 level. Brent crude price is at 69.52 per barrel. US has imposed a penalty if India buys Russian crude. So the crude supply arrangements are undergoing a change. Government is planning to buy lesser Russian crude. So because of all these levels, there is slightly uptrend in Brent crude price. But as long as it remains below 70, there is nothing much to worry about economy. Gold is at 98,841 for 10 grams, 24 carat. FIIs continue to sell. They have sold 20,524 crore during this week. DIS have bought 24,300 crore in equity during this week. They have matched FII selling. Auto sales for the month of July has come. They are just flat to positive, except that Tata Motor has reported a sharp fall in the auto sales. Hero Motocorp, TVS, two-wheelers all reported 1 to 2% growth. Mahindra and Mahindra has reported good auto sales numbers for the month of July. Exports of most of the companies have recorded good growth in July. GST collections for the month of July has come at 1.94 lakh crores. It has risen by around 7% year on year. Good GST collections indicate that industrial activity and commercial activity in the economy is continue to grow. Market sold off due to 25% tariff on India by US. We need to wait for Indian response and final trade deal. The negotiations are on. Markets will be on the edge till clarity emerges on this trade deal. Quarterly results so far are of average. The revenue growth is around 6% for the companies, and profit growth is around 10.6%. Markets are trading at high valuation. To match these high valuations, we need earning growth of around 20%, but earning growth is only around 10%. That is why markets are not enthused by the results. Mutual fund investors should remain invested for better returns in the long run. They should not worry about the day-to-day news flow and the volatility. By and large, the Indian macroeconomic fundamentals are quite steady and they are good. The growth is seen in the economy. So investors should remain invested and they will get good returns in the long run. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.